Good morning, traders. It is 8:01 a.m. Chicago time, 9:01 New York time on Monday, the 12th of June, 2017. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to remind you that this week is quad witching week. Friday is expiration day for futures, options on stocks, and single stock futures all at once. If you're trading US indices, you'll want to be trading the September contract designated as U7 or U17. So ESU7, ESU17 for the S&P minis. Um, that's not true for the European markets. European markets don't roll, they expire, and then you start trading the next contract on Friday. Um, Other than that, looking at the overall the market position after a beautiful sell-off on Friday, the market position is that it's looking to be slightly weaker this morning. The Russell is hanging on to one tick positive to unchanged right now, but most of it is red coming into today. Crude oil is the strongest. It is gapping up, trading at 46.55, up 72 cents or 1.57%, followed by the Japanese yen, the euro FX, and the euro bund. So that's all flight to safety. Although the treasuries are not faring too well here in the U.S. either. The 10-year is down, is trading 126.08 in the futures, which is lower, and the bonds are trading down. Looks like 10 ticks or so. So that's where we are. We have a mixed to negative bag this morning. That's basically the summary of that. Incredible range on the NASDAQ this morning. The sell-off on Friday appears to be the result of a report stating that the FANG stocks, that is Facebook, Amazon, Netflix, and Google, are overpriced. I believe it was Goldman Sachs. Don't quote me on that, but I think it was Goldman Sachs who stated that. Started those stocks on a slide. Should check out a chart of Amazon. And the market attempted to recover in the afternoon session into the close, and it did somewhat. The S&P closed right at the mid of the session, right inside of balance. Again, we'll look at that in a moment. Just interesting it's nice to see it let go every once in a while. As far as news coming out that could influence the markets, the market expect the Fed to hike rates later this week. I think Wednesday is the day. I'll go over the calendar in a minute. There's a 95.7% chance priced into the Fed fund futures that the Fed will raise rates again. Puerto Rico votes for statehood. An overwhelming 97% of voters voted for Puerto Rico to become the 51st state. There was only a 23% turnout, however. It looks like we have a clash setting up between Congress and the President of the U.S. regarding raising the debt limit to keep the government funded. This is likely to create some volatility, some risk for the markets. Looking forward to that. And then what else is there? Bitcoin hit 3,000. For those of you who aren't following, take a look at a chart of Bitcoin, just insane. I finally looked at the depth of market on Bitcoin, and it reminds me of equity trading back in 1999 or so when I first started. Anyway, so that's what we've got. As far as news this morning, new news or fresh news, not much there. Not seeing anything outstanding. Looking at the week since it's Monday, today we get the monthly budget statement in the U.S. at 2 p.m. Eastern, expecting negative 87 billion for May. Other than that, not seeing anything else that is outstanding that needs to be announced here. We do have some auctions, treasury auctions at the standard auctions at 11:30 Eastern for the 3 and 6 month bills, and then at 1 o'clock we get the 3 year note and a 10 year note reopen. As far as the week, tomorrow, the UK, we get PPI, CPI, RPI, the German zoo survey, and then we get the US PPI core and the beginning of the FOMC meetings. Wednesday, we have German CPI, UK ILO, Eurozone industrial production and employment. We also get the rate decision in the US, retail sales, CPI, and business inventories, as well as Fed's Yellen, the meeting with Fed's Yellen after the FOMC. That is likely to be a mover. Again, a huge probability that they're going to raise rates, so a surprise would be quite surprising. Thursday, UK retail sales, BOE asset purchase and bank rate. So we get the announcement from the Bank of England on Thursday. US import prices, Empire Manufacturing, and Philly Fed. So that day is fairly busy. And on Friday, we get Eurozone CPI, US housing starts, building permits, University of Michigan, and Fed's Kaplan. So we have a nice distribution throughout the week. However, note that, until the FOMC on Wednesday, we might see some pretty choppy trade. And don't forget, it is Quad Witching Friday, as I said earlier in the video. It is Quad Witching Friday this Friday, so the market's likely to spend a lot of time attempting to pin expiration, hedge delta against options, futures against options, and things like that. So you might see some action on the charts that may not make sense, and the market may not be easy, may not easily move around. As hedges are put on into expiration. So also you'll notice that your volume is higher than normal. This is, well, Friday's volume was higher than normal given the drop, but overall the volume this week is higher than normal, and the delta is not as reliable as we'd like it to be. It's kind of stinks that Friday we had our biggest move in a long time. And it's right into rollover. Let's take a look at what we expected on Friday. Now, understand that with Friday, until we hit the news, we were on Hypo 1, which was for the market to have a small, tiny little pullback and then to actually take out the highs and go and make new all-time highs, okay? And there was no way to expect that this announcement would come out regarding um, regarding the sell-off. So up to the mid-morning on Friday, we were on Hypo 1. Hypo 2 was looking for an attempt at the high failure and then for it to test the other side of the prior day's balance and then to sit in the middle. And then the tertiary hypothesis was for a strong rotation up that sets us off into a small trend, which is unlikely on Friday, and that's why it's the third hypothesis. This is what actually happened. Here it is. Friday, we get an open auction right back here. An open auction. Then we have a drive up. So we're getting Hypo 1 up to about this point here. And then from there, the market comes back, puts in neutral. So it had already taken out the IB high, took out the IB low, pull back to the prior day's high, to the opening swing, and then starts to move down. First test is the prior day's point of control. You could see it hit to the tick there for a quick 3-point rotation, 3.25-point rotation to the IB, which sets us up. The IB sets us up here. We're back inside of the range, so we now target the point of control, and we target the value low down here. And so that's what we're looking for, just 2 to 3 point rotations, and then the market just continued lower and lower and lower and started to test prior the prior rally zone back here. Remember, I talked about 24.15 is likely to be taken out at some point. I spoke about this. I might have spoken about it on Friday, stating that 24.15 presents an area where we have this low volume right here. We have this area that's formed from a rally, and the market has been sitting sideways up here. And if it cannot successfully continue higher, then it's likely to test at 24.15. And then it ended up dropping down to 24.1250. So we took back the entire rally range from June 2nd, I believe. That entire rally we took back and went down into this point of control, this high volume node, which was the expected target to the downside. And so that's where we are. Overall, though, once we got down here, the volume tapered off really fast. And then the market, and if you look at the delta, even though it's not so reliable right now of because of the fact that we are in a rollover situation, you could see there's some pretty strong buying into the close here, and it was brought back. The market was brought right back to its mid, which puts us right in the middle of um, this balance. See, look at as I roll this profile forward, here's our balance up to this point, and we ended up going right back to balance. So on Friday, the market pushed higher, okay, pretty weak high. It sat around here and traded a lot. The point of control did not shift lower until later in the session. So there's a lot of interest at these prices up here at 24.41. And then it sold off and it took out the low of the balance zone right down here. And then it finished in the middle of the balance zone. I would caution those who come in today and through the week and are looking to hit the market, hit and sell, 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 because they're salivating. The VIX has picked up nicely. There's your VIX chart. Has picked up from way down in the mid 9 to 12. It went up to 12 on the VIX before settling off and pulling back to the mid of the VIX at 10.74. So if you're thinking, gosh, this is blood's in the water, let's feed, just relax. We've seen this so many times over the last 2-3 years that the market will sell off, it'll come right back, and it'll grind its way up to where it was. Why am I saying that? I'm saying it because we are back in balance, people. This is the close of Friday. This is the closing bar of Friday. It is within a few prices of the 24.30 and a quarter point of control for balance. If the market's able to come back to balance within reason, I think it closed at around 24.28. It's 2 points away from the MC point of control. We are not in a sell-off market. We are in a balanced market. Despite the volatility and the aggression that we saw on Friday, you got to look at the big picture. You got to determine what the auction is doing. So that's where we stand. Coming into today, just to carry the story forward for context, coming into today, we opened basically where we closed. We've tested the open a couple times and have sold off a little bit, but we're not going anywhere and we're not doing anything. So is this likely to continue lower and give us our continuation move? It is. That's the expected rotation of the market. We expect this sell-off to get its continuation. So we're looking for something below 24.1250. However, I don't believe that we're likely to get this. We're likely to drift up from here. Again, I'm going to caution you, if you're someone who's looking to get short and to hold on to a heavy short swing, I would caution you, you might want to hedge that position until it actually materializes. It's worth the premium cost of an option to hedge the upside. Of course, with the VIX higher, premiums are higher, but it's still worth it if you believe that we'll continue to sell off. We basically tested the next high volume node down here, almost on the nose right here, almost on the nose, and bounce right back up into balance. To me, that is saying, we're not interested any lower, and we're likely to drift back up. So if we look at the weekly profile, I have it split here as part of the homework I was doing. Here's the weekly profile. There's your Monday, Tuesday, Wednesday, Thursday, and Friday. This is what the market did last week. And you can see Friday is an engulfing pattern that finishes where? It finishes inside of Tuesday, Wednesday, Thursday. We finish right in the middle of last week's range. So if I split this, you'll see that the market, this is the red asterisk is where we closed. And you'll see that the market closed right on top of the weekly point of control. That is balance. It is not selling. So be cautious. We did test and take out. Remember, I talked about this last week. We did test these thin areas, these single prints. We took them all out and we found buyers. You could see there's a clear excess low, and the market has come back into balance. So expect chop today, expect chop tomorrow, expect chop up to the FOMC. And then once the FOMC is in, the market's now free to make its next move. But on top of that, we're coming into quad witching Friday, and so there are some unusual things that could happen. Anyway, that's my time. Let me look at the hypos that I have for today. The hypos today, looking for an open auction that tries to sell off, and I'm looking for buyers to step in. So the bigger move is actually up. The impulsive move is actually up. Looking for the close to be closed. Looking for it to push up into this key LVN right up here. The key LVN exists at about 32. And then I expect the market to turn and finish somewhere in the middle here around 24.30. That's hypo 1. Hypo 1 is mainly to the positive side and expected to finish higher. Hypo 2 is immediately responsive, pushes up and through, gets to 24.30, finds its sellers, comes down a little bit, and then finishes a little bit lower, somewhere in the 24-25 area. The main move on hypo 2 is down. I'm looking for areas to get long this morning and into hypo 1. That's what I'm expecting to play out. I'm looking for this low volume node, the key low volume node, to be tested from Friday. Okay, that's what I have for you. Good luck today, and I'll catch you tomorrow. Have a great week. Take care.